Okay, so welcome to the deep dive. Today, we are going kind of beyond just, earning a living. We're diving into assets.
Yeah.
Those things that can generate income and appreciate in value. Things that work for you even when you're not working.
That's it.
Right.
Yeah.
And hopefully helping us all move away from just, trading our time for money.
Absolutely.
Our mission today is to explore 15 specific assets that a lot of our sources point to as key players in building real lasting wealth.
Right. And I think the idea of building wealth can seem kind of complex and overwhelming to a lot of people. But when you really boil it down, it often comes down to, strategically acquiring different kinds of assets and making your money work smarter, not harder.
Yeah. And what's so interesting, I think, too, is just how many different options there are. It's not just, getting a high salary or, winning the lottery or something. There are so many paths to real financial security. Okay, so let's unpack this, and we'll start with some foundational stuff. Tangible assets.
Okay.
Number one on our list is real estate.
Okay.
Now, we hear about this all the time, but for good reason, right? This has been like a wealth-building cornerstone for ages.
It really has. And, I think real estate offers several different routes to building wealth.
Right.
So, rental properties, for example, can provide you with that kind of consistent stream of passive income. Yeah. Right? That regular rent coming in.
Right.
Is your money actively working for you? Another approach, of course, is house flipping, buying, renovating, and then selling for a profit.
Yeah.
It requires more effort, but it can yield significant returns. And then there's things like REITs, real estate investment trusts.
Yeah, REITs. I think this is a really interesting angle for a lot of people because you can get involved in real estate without actually having to, manage the properties yourself.
Exactly.
Be a landlord, deal with those 2 a.m. calls about leaky faucets.
Right. You're not dealing with, tenants or toilets at 2 a.m.
Right, exactly.
So REITs are companies that own and operate income-producing real estate.
Okay.
And you can buy shares in them, much like stocks. So it's a way to get exposure to the market and potentially earn dividends without, having to be a direct landlord. And regardless of which, real estate strategy you're interested in, location and positive cash flow are absolutely vital.
Okay, so moving from bricks and mortar to something with a different kind of shine.
Okay.
Precious metals, gold and silver.
Yes.
These have such a long history as stores of value. It's kind of fascinating. Like, why have these held up so well for so long?
I think it's that enduring appeal, right?
Yeah.
They've been seen for centuries as safe havens, especially during times of economic uncertainty.
Yeah.
They tend to maintain their value and sometimes even increase when other assets are struggling. So it's kind of like a long-term financial insurance.
Yeah, that's a good way to put it.
And a lot of our sources point out that, wealthier individuals tend to include precious metals as part of their portfolio strategy for that long-term security.
Okay, so next up on our tangible asset list is farmland and agriculture.
Okay.
Now, this one might not be the first thing that pops into people's heads when they think about getting rich.
Right.
But when you think about it for a second, it does kind of click.
It makes sense, right? When you connect it to that fundamental human need for food.
Right.
Land that can produce food is inherently valuable.
Yeah, makes sense.
There are lots of ways to kind of get involved here.
Yeah.
You could directly purchase farmland and lease it to farmers, so you essentially become a landlord of land.
Oh.
You can invest in agricultural stocks or ETFs.
Right.
Gives you broader exposure to the industry. Or for those who are, really passionate about it, starting a farm or vineyard is another path, but obviously much more hands-on. The key here, though, is the long-term stability and the consistent demand that's associated with agriculture.
Right. Food's not going out of stall.
Exactly.
Okay. So now, something that might feel a little bit more like a hobby, but can actually be a really interesting asset class, collectibles and luxury items.
Oh, okay.
Talking about, classic cars or rare sneakers, fine art.
Yeah.
The kinds of things you see going for crazy prices at auctions.
Right. And I think what's interesting here is this intersection of passion and investment, right?
Yeah.
These items often have an inherent value to them because of their scarcity or historical significance, or the quality of their craftsmanship.
Right.
And as our sources point out, there's a whole market of collectors and investors who are willing to pay, top dollar for these high value pieces. And, their value can increase considerably over time as they become even rarer.
Yeah, they're not making any more 1960s Ferraris.
Exactly.
Okay, so we've covered some of the tangible assets.
Yes.
Let's shift gears now and look at something that can potentially accelerate wealth building in a big way. Owning a business.
Okay.
This is where you go from working for money to having your money work for you.
Right. It's a fundamental shift.
Yeah.
Instead of trading your time for a fixed income, you're building an entity that can generate income kind of independently of you.
Right. And the income potential here, the sky's the limit, right?
Yeah, absolutely. And, our sources emphasize that compared to traditional employment, the income potential here is often much greater.
Okay. And it's interesting, too, how the types of businesses you can launch today are so diverse. We're talking about, online ventures like e-commerce, drop shipping, affiliate marketing, all these things that have really exploded in recent years.
Absolutely. And the digital age has really lowered the barriers to entry for starting all sorts of businesses.
Yeah.
You also have things like service-based businesses, like, consulting or coaching or digital marketing agencies, where your expertise becomes the core asset.
Right.
And then, of course, there are scalable businesses, things like software or subscription models that have the potential to grow very, very quickly.
Okay, so let's move on to the world of finance now.
Yeah.
Starting with stocks and dividends.
Okay.
Now, this is often, I think, the first thing people think of when they think about investing.
Yeah.
And for good reason.
Right. Absolutely. Stock's a powerful tool for long-term wealth creation.
Yeah.
The basic idea is that you're becoming a part owner of a company.
Okay.
And as that company grows and becomes more profitable, the value of your shares can increase. So again, it's that idea of your money working for you continuously in the background.
And there are different kinds of stocks, right? You've got...
Yes, absolutely.
Like the growth stocks, maybe like a Tesla or an Amazon back in the day, where there's the potential for, huge price increases.
Yeah.
And then there's things like the dividend stocks, maybe like a Coca-Cola or a Johnson & Johnson that pay you regular income just for holding the shares.
Exactly. So growth stocks, they reinvest their earnings to fuel further expansion.
Okay.
Whereas dividend stocks tend to be more established companies that distribute a portion of their profits to shareholders.
Okay, that makes sense.
And then for those looking for kind of a less volatile way to enter the stock market, index funds and ETFs offer a more diversified approach.
Okay.
So an ETF or exchange-traded fund is essentially a basket of stocks that trades like a single stock.
Okay.
And they often track, specific indexes like the S&P 500.
Right.
The key takeaway here really is the importance of starting early investing consistently and allowing the power of compound interest to do its thing.
Yeah, time in the market beats timing the market, as they say.
Absolutely.
Okay, so let's go a little bit further out on the risk-reward spectrum now.
Okay.
Private equity and venture capital. This always feels very...
sophisticated.
Yeah, sophisticated investors.
Yeah, historically, access to these investments was more restricted. But the idea is that wealthier individuals often invest in startups or, early stage companies before they become widely known or go public. The risk is higher, of course.
Right.
A lot of new businesses fail.
Right.
But the potential rewards are also significant if you get in early on a company that becomes successful.
Yeah.
And things like AngelList that some of our sources mentioned are increasing access to these types of opportunities for a broader range of investors.
Wow, that's like getting in on the ground floor of something.
Exactly.
Okay, we also have peer-to-peer lending mentioned here.
Yeah.
This is something we hear about every now and then, but can you give us just a quick overview of how that works as an asset?
Yeah, so essentially peer-to-peer lending platforms connect borrowers directly with lenders, bypassing those traditional financial institutions.
Okay.
So as a lender, you can earn interest on the funds that you provide to individuals or businesses.
Okay.
It's another way to generate income from your capital.
Right.
Of course, as with anything, there are risks.
Right.
Borrowers could default on their loans. And it's important to, consider the interest rates being offered in relation to those risks.
And we also have REITs mentioned again here, along with real estate crowdfunding.
Yes.
So these are both, ways to get involved in real estate without directly owning property.
Exactly. We talked about REITs.
Yeah.
Real estate crowdfunding is another method where, a group of investors pool their money together to invest in projects. So this can lower the barrier to entry for investing in larger scale developments that might not be accessible to individual investors.
Okay, so now let's move into the digital age with our next category.
Okay.
Digital and intellectual assets.
Right.
I feel like this is like a really dynamic
it is.
And rapidly changing area. First up is cryptocurrency and blockchain assets.
Okay.
This has certainly been a hot topic.
It has very much in flux.
Yeah.
Which means there's potential for high returns, but also significant risks.
Yeah, for sure.
Bitcoin and Ethereum are the most established digital assets. But there are also a huge range of other cryptocurrencies, often called altcoins. Things like Solana or Cardano, which may offer even higher potential rewards, but also, greater volatility. And then, of course, there are NFTs, non-fungible tokens, and the underlying blockchain technology that's creating these new forms of digital ownership. And this has implications far beyond just, the cryptocurrency space. So, for example, blockchain is really underpinning this whole movement of decentralized finance, or DeFi, which is aiming to recreate traditional financial services, but in a decentralized way. I think the crucial advice here, and our sources really emphasize this, is to only invest what you can afford to lose. And to approach it with a long-term perspective.
Yeah, it's the Wild West out there.
It really is.
Okay, next up, in the digital realm.
Intellectual
property, or IP. This is about turning your ideas, your creations, into income-generating assets.
And I think what's really compelling here is this idea of creating something once, and then being able to generate revenue from it repeatedly.
The gift that keeps on giving.
Exactly. So patents and trademarks protect inventions and brand identities. If you write a book or develop an online course, you can sell those through platforms like Amazon Kindle or Udemy. Musicians and other creative professionals can earn royalties from streaming services. So it's about leveraging your creative output or your expertise to build these streams of recurring income.
Okay, so we've also got things like websites, apps, even domain names listed here. And this just shows, how the internet has become like a new form of real estate.
A well-designed website or blog can generate income through advertising or affiliate marketing, where you earn commissions by promoting other companies' products. A successful app can bring in revenue through subscriptions or in-app purchases, even just owning premium domain names. Those short, memorable web addresses can be incredibly valuable.
I've heard stories about those.
Oh, yeah.
Crazy.
You can sell them for substantial profits.
And the best part about a lot of this stuff is the passive income potential. Earning money even when you're not actively working. Okay. And finally, in our digital and intellectual assets category, we've got royalties and licensing.
All right.
This sounds related to IP, but maybe a slightly different angle.
It is related, yeah.
Okay.
So royalties and licensing involve granting others the legal right to use your intellectual property. Your patents, your trademarks, your creative works, in exchange for a fee or a percentage of the revenue they generate from it. So it's another way to leverage your IP without necessarily being directly involved in the production or distribution of the final product.
Okay, so we've covered a ton of ground here.
We have.
Tangible assets, business. Financial assets, digital assets. And now we have this slightly different, but I think equally important category, personal development and networking. Now, these aren't things that you can buy and sell in the traditional sense, but they're absolutely crucial.
They are.
For long-term wealth building.
I mean, self-education is probably the most valuable asset you can have, right? The more you learn and understand, the better equipped you are to identify opportunities, make informed decisions, navigate this whole world of wealth building. It's an investment in yourself that can pay off for your whole life.
And then there's your network. The people you know. There's that saying, your network is your net worth.
There's a lot of truth to that. Your connections can open doors, provide valuable insights and advice, and, even lead to partnerships and investments that you might not otherwise have come across. So cultivating and nurturing a strong network is really vital. And I think it's often an overlooked aspect of wealth creation.
Okay, so we've covered a lot.
We have.
15 different types of assets, from the traditional ones like real estate and precious metals to, the entrepreneurial path of business ownership, this crazy world of cryptocurrency, the power of intellectual property, and, even the importance of self-education and networking.
Absolutely.
I think what's clear is that wealth building is not a one-size-fits-all approach.
It is not.
But rather a diverse landscape of opportunities.
Yeah.
So I think the key for you, the listener, is to consider which of these areas resonates most with your current skills, your interests, your tolerance for risk.
Right. Which one kind of sparks your curiosity?
Yeah.
It makes you think, maybe I should check that out.
Right. And, even if it's just a tiny step, what's one thing you could do this week to just learn more or even tentatively explore one of these?
Yeah.
I think that's the real takeaway here.
Right, because ultimately building wealth isn't just about earning a paycheck.
Right.
It's about cultivating these assets that can work for you, both now and in the future.
Awesome. Well, thank you so much for joining us today on The Deep Dive.
Been a pleasure.
We'll see you next time.
All right. Bye.